Guys, one of my favorite companies just reported. That's Nike. They crushed, for lack of a better word. Earnings per share came in at 79 cents versus 55 cents. Revenue of $12.4 billion versus $11.5 billion. You can see that the stock price is up about 3.5% after hours. I did see it as much as 4.5%, and it was up over 3.5% today. So let's go into the report and see what they did. This is going to be my first time checking it out. Third quarter revenues are up to $12.4 billion, up 14% compared to the previous year. That is a very, very big number, especially seeing what we're seeing in retail right now and what we're seeing with other companies, with especially in the tech world, that are saying, hey, we're seeing falling revenues. These guys are increasing. I mean, let's go to the revenue. I'll go right back to that, but I want to see the revenue of, so they did $38 billion in 2018, $40 billion in 19, a little fall, and then a big spike up, and they've continued to grow that. So it doesn't seem like people are backing off of that. I would probably say a lot of that had to do with China because they just opened up from their COVID zero policy, but we would see more of that in the earnings call later today. Direct sales, Nike direct sales. Remember, they pulled out a lot of their products from Foot Locker and other stores because they wanted to go direct to consumer through Nike.com, through their Nike stores. We're $5.3 billion, up 17%. So that is a huge move and something that they're going after. Brand digital sales increased 20%. Wholesale grew 12%. Gross margins, however, did decrease. Not terribly surprising because of what's going on with costs of everything. Let's see. Diluted earnings per share for the quarter was 79 cents, down 9%. Okay, interesting. Let's see if we have anything else here that is big. Let's see. Inventories were $8.9 billion, up 16% from the year before. And if you remember going back, there was a lot of these retail companies that had a lot of issues with inventory. So that'll be something else that it'll be interesting to hear what they say in the earnings call. But it doesn't seem like shareholders really care about it. Dividends, $528 million, up 9% from the year prior. Let's see here. They paid out approximately $2 billion to shareholders. Share repurchases of $1.5 billion. I don't really love that, but that's what they did. So let's look at Nike as a whole, go over it. It's now up 3.4%. So one of my favorite things to see here, with the exception of cash flow growth, is that these are my two metrics that are out of whack. And Nike is a company that I do want to own. At some point, I do think that I will own Nike. It's something that I've wanted for a very long time. Something that really gets me and has always gotten me there is that ROIC. And guys, you notice here, these are my pillars, and then we have the EM pillars. I created them up here in Tools. You actually come here to Tools, you click this drop down, and you come to Pillar Screener. And you can type in whatever you want to put in there. These are a couple that I did the other day. I actually threw one in there the other day. We were doing a video on dividends. So I went in, and I just went to popular metrics, came down to dividends, and I put greater than 7%. And that was because I wanted to find some companies that were maybe couldn't afford their dividend. And that was something I could do. You can use it as a screener, or you can use it to kind of go a little bit deeper than just the EM pillars. For example, ours is greater than 9% ROIC. I put in 12. We do PE of 22.5. I put in 25. We have cash flow growth greater than 0. That's what I wanted to see. I just wanted to see, do we have cash flow growth in a company? That one I wasn't being as stringent on. So there's different things that you can do. Click search. It'll give you a whole bunch of stocks, guys. $7 for 7 days. Try it out. The price is going up. It's $29 a month right now. It's going to go up from there. So get in there while you can. Let's go back to Nike. So Nike, 8 pillars. Let's see what's up with the cash flow. Let's see what's up with their cash flow. So their average 5-year free cash flow is $4 billion. And this is not in any other financial statement. We added this for you. You are welcome. All right. $3 billion. I mean, they're very consistently around $3 billion, $4.5 billion, 4.75 there. 3.5, and then they jumped to 6, and now they're back down to 1.78. So that is probably why you're seeing that cash flow number that's not hitting on the EM pillars. That's exactly why. What was that? Is there a reason for that? Was there any big changes? There was a massive change in working capital right here, $3.83 billion. So if I was an investor and I was going to buy this company, I would go and see what that was. I would pull out the 10K and start going through there and saying, hey, what exactly happened in here that made this big jump? What was their debt number? Oh yeah. So this company can pay off all of their debts, all of their long-term liabilities with 3.55 years of their free cash flow. Even with that big drop. That's awesome. All right. Anything else stand out here for me? I'm just going through and checking out gross profit margin of 44.5%. I really like to see that. Profit margin of 4.7%, and I do think that's going to go up in the future. They're probably just hitting a little hiccup here. They pay out $1.92 billion of dividends out of their 5-year free cash flow of 3.99, so about half of it, which is fine. The only concern that I have is, remember, they went from 6 and they dropped down to that 1.7 something. So are they going to grow from that? I think they are. I wouldn't be super concerned if I was you. All right, let's see what the analysts have to say. Retail is going to be interesting, especially in the recession. You know what? Why don't we go back, before we jump into that, let's go back to 2007, 2008, and how they did. So they really didn't get hit at all. Look at this. So let's go 2006, 15.6 billion, 2007, 17 billion, 2008, 19.6 billion. Very, very minimal fall, 18.36 billion. So they maybe about $1.3 billion, and then they came right back to it and they continued to grow from there. So I don't like saying that stocks are recession proof, but it seems like they didn't really miss a beat there. Net income, slight hit in 2009, but right back to it in 2010. So I am not super concerned about this company. Let's check out the cash flow real quick of 2008, 2009. Last recession, yeah, actually, it continued to grow. It fell a little bit in 11 and 12, but that probably doesn't have anything to do with that. All right, I'm kind of getting excited here. Earnings per share, $3.17 to $3.46. That is some big growth. And you notice how much bigger this is than when you look at the revenue side, growing from 50 billion to about 70 billion. This is mid-teens growth, if not high teens growth, and this is high single digits. Why is it that way? Because they have such an enormous return on invested capital. Their return on invested capital is about 20%, 20.56%. That is a big number, and that's why you're going to see that earnings growth coming out of Nike. All right, let's do some stock analyzer here while I take one last peek at what the analysts are saying about revenue growth. All right, so man, I wish this company would buy Peloton. I think that that's something that they could really get people more involved in their brand and more sticky with their brand, even more so than now. I mean, it's one of the stickiest brands out there, but I think that having Peloton and having a really good fitness product, Peloton's company is terrible, but the product is awesome. I think having a really good product would keep people at Nike and really anchor them to the brand. Maybe people that aren't there would jump over there. If you're with Adidas, Under Armour, Reebok, whatever. All right, so let's look at revenue growth. Let's go over 10 years. Let's go 4. I'm going to go 4, 7, and 10. I do think that 10 could be a little high, but if they start getting into that space of maybe a Peloton type deal where they sell more hardware products, not just clothing, etc., maybe they can do make some noise there. Now, profit margin. I'm going to go with 9.5, 10.5, and 11.5. Oops, 11.5. All right, free cash flow margin. I will do 8.5, 9.5, and 10.5. A little bit less, but not a lot less. PE. Let's go 16, 17, and 18. 16, 17, and 18. And I'll go 10, 11, and 12%. I'm questioning my revenue growth numbers. Let's see what this puts out, but I am questioning my revenue growth numbers saying, so when I do this, I look at 4% and say, yeah, that's pretty damn low. I don't really think that that's super realistic. I look at this and say, that's pretty high. I don't think that's super realistic. I think 7% is kind of that sweet spot number. If anything, I would probably increase this to 5 and drop this to 9. But let's see what this comes out with, and then maybe we'll put those numbers in. So you can see it's on my watch list at $60. Just because I see all red right now doesn't mean don't buy it, obviously. Just because I see all green doesn't mean go buy it. It means do more research, okay? Let's click Analyze. Somewhere between $43 and $50, $79 to $86, and a middle ground $60 to $65. And you can see that it's on my watch list at that. I'm going to quickly change this. Let's go 5 and 9 up here. 47 to 53, 73 to 80. Middle ground, 65 to 59. This is my number, guys. So if you like Nike, if you like this channel, subscribe to it. We'll do a lot more of these. Have a great day.